evening, ladies and gents, friends and family. Welcome to the live showcase of the Beacon of Hope in the F&B and retail ecosystem. This live showcase is specially brought to you by AQ Markets by Invest AQ, where we market deals, businesses and entrepreneurs to grow and scale their business. For those who are joining us for the very first time on Invest AQ channel, we are a financial PR incorporation Malaysia that help entrepreneurs to craft their niche and amplify their presence to the right channel of audience and investors. My name is Arthur Tan, one of the co-founders of Invest AQ, and we bid you welcome to tonight's live showcase. The extension of MCO and now EMCO, businesses continue to be in a dire situation, especially with F&B and retail businesses. News on the lockdown came down hard on restaurants and eateries around the country, with strict regulations against patron dining. This being said, Bernama 2020 reported that F&B businesses had suffered a 90% loss in revenue throughout these endless lockdown restrictions. This makes sense because we have almost experienced a total of 151 days of full lockdown just within MCO. And with the rest of CMCO, RMCO, EMCO, so many COs, that brings a total of 464 days. Well, I've pretty much done have some homework over here. The social distancing order has also enforced to flatten the COVID-19 curve has definitely disproportionately impacted Malaysia's restaurant sector, and as a result, businesses will be hesitant to employ more people, going into bankruptcy, and trigger the rapid shutdowns of restaurants and hotels. Even if the pandemic disappears tomorrow, people will still have anxieties about dining out for a very, very long time. Now, more F&B retail players have resorted to establishing online presence and digital alternatives to create visibility among consumers as a way to mitigate economic loss. And this is how Eatcosys saw an opportunity in becoming the catalyst to sustaining these sectors, keeping businesses alive by providing a holistic digital solution in the ever-evolving F&B landscape. And this evening, tonight, we have the brainchild of Eatcosys being with us to share more insights about the establishment in becoming the beacon of hope to F&B retail sectors. Joining us is Tham Vincent, the group chairman, and Vincent Kok, the group CEO. Welcome on board, gentlemen. How are you guys doing?
We're good. Thank you for having us.
Good. We're good.
How's the EMCO treating you guys so far?
It's still business as usual. We're still functioning, albeit from home, but nevertheless, the business still goes on.
And closing more deals as well, of course. I was told that you guys are towards nearing the end of your round of closing as well.
Yes, that's been progressing very well for us. We're thankful that even at this time, we still have support from investors near and far, right? So, yeah, grateful
Very
for that,
brilliant.
for sure.
Very brilliant. Now, I think I want to dive in straight into understanding Eatcosys a little bit better. Now, when I pronounce the word Eatcosys, the first word that really comes to my mind is unity and integration. Somehow these two words really came to my mind. Could you share more of the inspirations behind this word? And if live viewers, if you do pay attention, even on the logo as well, they have synergized using a lot of colors to represent unity, the togetherness. Probably I'll leave it to one of you gents to be sharing more in depth.
Vincent, you may share that, right?
Right. So, Eatcosys came about because, it's really an inspiration from both of us and also the founders within the group. Our challenge or our challenges that we've gone through over the years. We've known how hard it is to start up a new business, especially in F&B and retail, and especially at a time like this where there are so many conditions or so many hurdles put along the way. What we wanted to do was to build a support system to enable whether an entrepreneur in either F&B or retail to be able to jump through these hurdles slightly more easy than what we had experienced ourselves. So as the name suggests, it's an ecosystem of technologies and systems to help companies start up, grow, and scale. Right? I'm sure Tham has more to add.
Very interesting. Tham, is there anything else you want to elaborate from there? Okay, just while waiting for his connection to stabilize again, I think Vincent, that's a very, very brilliant idea that how you really connected the dots coming together. Even just by just looking at the logo, it really just explains everything. Now, Eatcosys was also certainly founded at a very interesting time, or rather I would say at a very trying time. And of course, some people could see it seizing opportunities during crisis, and of course at the same time also people have been wondering, are you sure that now at this time you want to bring all companies coming together at this time, and especially let alone F&B is actually suffering. So now we all know what the stats, right? That's 80% F&B businesses is shut down, with the endless lockdown. 18% only could survive, more than 6 months. So at this crucial time, why Eatcosys was founded, and how it can play a pivotal role in solving this national crisis.
I think, you say we chose this time. We didn't choose this time to, we don't choose this time in particular to start this, but you can say the time chose us, right? It just fell upon us. So what do, right? You can let the circumstances dictate you, or you can rise above it. In this case, we decided that no matter what the circumstances were, business still had to continue, right? And I think coming together at this time was opportune for us because it allowed us to put together solutions that we didn't previously have. It put together services that offer a more complete set of services and solutions to the merchants on our platform. So let me give you an example, right? Number one, at the very end of the scale, or at the very start of the scale, right, we have solutions like Food Advisor, which help merchants who are starting out, right? So if they wanted to be found, to be discovered online, yes, there are food marketplaces, but getting onto those food marketplaces, if you're a newbie, poses certain challenges, right? Because it takes time for you to be onboarded. But we have Food Advisor, which is a food discovery platform, primarily through Google search, right? So if you were to search for any food item, whether it's a chicken chop or best coffee or best pasta in KL, PJ, or Penang, you would typically find a Food Advisor link appearing in your Google search results, right? That is perhaps the starting point for many merchants to be brought onto our platform, because we provide them with a simple solution that allows them to be onboarded in 24 hours, right? So if they come in today with their details, they will be up tomorrow. And anybody searching for them, let's say if they sell nasi lemak in Penang, they will be found by tomorrow. Right? So that's as simple a solution as we can think of to assist entrepreneurs.
And certainly this wasn't really built from just within the last period of 1 year. All these companies coming together was also an effort that was hard work for the past couple of years, right? Okay. Just to make
That's
sure
right.
that we are getting connections from Tham as well. Tham, I just need you to nod your head, or probably could you just speak? Okay. Just to ensure that Tham is still alive. Tham is staying in a very,
I'm still alive.
He's always alive, yeah.
And he's not a
I feel
robot.
good to be alive. Okay.
Tom, we probably just miss you just a bit. I think it's also quite important for a chairman, to elaborate that part, of Eatcosys. That where could you just very quickly, just share, whole inspiration behind it? Yeah.
Well, because we have been in the F&B industry for so many years, personally for me for more than 8 years, and we have faced a lot of pain points when we run business, especially when it comes to on one hand we are thinking of how do we increase sales and reduce costs. On the other hand, we are also looking for solutions and even tools to help us to achieve that, right? But the problem is, whenever we are looking for tools or even solutions at the same time, we're dealing with too many vendors. And all these vendors, they do not talk to each other. Hence, when we want loyalty management solutions, they may not be able to talk to the point of sale system vendor, right? Okay. And when we want to have a procurement system to be integrated with our accounting system or even with our inventory management system, they're unable to do that as well. So that has kind of wasted a lot of our precious time. At the same time, it does not achieve it doesn't give us very optimal solutions, right? Hence, I've been always telling myself, okay, if there is one company out there who are able to provide a total solutions to the retailers so that we are able to focus on what we are good at and leave all these solutions to one party who are able to communicate within themselves, and I just have to deal with one person, wouldn't that be great, right? But after spending more than 8 years in this industry, I couldn't find one, and hence I inspired to let's build one ourselves, right? That's after I met Vincent in 2015, and the technology space, it kind of I find it very fascinating, and in order of asking for someone else to build it, why not based on my own personal experience in the F&B industry? I think I will be able to provide a lot of valuable input to build that solutions which will really address the issues that the retailers are facing. Yeah. So we built this platform in order to empower the entrepreneurs in the SME market so that they're able to unleash their potential.
Now, Tom, you have always been an ecosystem builder, or rather integrator. If I could remember very vividly, from all your past experience, when I first got to know you, it was holdings or group that where you brought down the very famous US homegrown Johnny Rockets, and of course your very own library coffee. And then after that, you move on to Rhombus, which you have 30 establishments under your belt. And of course now you become your own self-owner for your own coffee chain, which is growing also by leaps and bounds. The Union Artisan Coffee, and right now with Eatcosys, we're in a very short span. And again, another ecosystem integrator. Now, while on the other hand, Vincent, you also have played many roles, literally, correct me if I'm wrong, but involving in telecommunication. You have always been in the digital space, in telecommunication, e-commerce, tourism, marketing portal, you in finance as well, and you have dabbled a couple of roles from being a GM sales, and also played several roles as a CEO. Now, with that, Tom, I need to ask you this, with your abilities or forte that you have always been integrating brands, and primarily F&B, how do you intend to be taking your past experience, whatever that you have gathered, whatever that you have experienced, to apply into this round of integration? What is the distinctive difference here?
Well, that's a very interesting question, right? Okay. For me, it doesn't really matter what industry we are in. The logic behind it are pretty much the same, which is how are we able to extract the synergies among the companies that we acquire or put things together, right? Okay. So see us as venture builders or someone. This morning they put it very aptly. They call me a Lego builder, right? Okay. So well, I'm not joking when I say it's a Lego builder. Why do I say that? We always build with a very small foundation, right? Okay, so everything starts from a small foundation, like a seed. But as long as we have that ecosystem business model in mind, we will know what are the things that we want to build along the way, right? Okay, so let me just give you a few examples. Back then, during my old days in right, which runs library coffee bar, and Johnny Rockets as well. We know we want to build a F&B lifestyle group, right? Okay, not only in a restaurant and bar, but also in the food segment as well, right? Not only to hold our own so-called corporate-owned brands, homegrown brands, we also franchise from third parties in order to diversify away our risk. Right, so diversification also play a very important role when we build that ecosystem. Right, the only difference is we did not build the back end, which is the production. We did not build the central kitchen. We did not supply those products to outsiders. So we always get that from our suppliers. But that gave me a lot of ideas, right? When we build the next venture, I would like to extend the services and solutions even upstream, so that we don't have to be focusing on the downstream, which is the outlets. We're also able to become a supplier, providing services or even solutions to other cafe or even restaurant operators as well. So that part I'm able to achieve it when I build Rhombus Connection, which consists both the physical outlets as including the central kitchen as well, right? But that has given me a lot of a steep learning curve, which has definitely benefited Eatcosys a lot, because by doing that, we realize, right, it's not easy to integrate so many things. So why not focus on being a solution providers instead of having a physical store at the same time? That's why you can see that under Eatcosys, we do not own any physical stores. We do not own any brands at all, right? Okay. Even my personal ownership in Union Artisan Coffee is not part of Eatcosys, but we have benefited a lot, okay, by utilizing the services and solutions provided by Eatcosys. So Eatcosys itself, why they're able to reap the synergy tremendously, because we are very much focused on, right, being a solution provider, leveraging on the new acquire businesses and also the team, and build a culture focusing on, okay, empowering the underserved market. So by everyone guided by the same principles and vision, which is empowering the underserved market, we're able to achieve the same goal. Yeah. So if you look at it, it's an evolution from when we started, when I started building AOMH to Rhombus Connection, then Eatcosys, and we have refined the model along the way.
Yes, I could really see it. It's very well put. Vincent, for you as a seasoned CEO, what are the key challenges that you anticipate this round?
I think one of the things that we always anticipate is that the goalposts will always move, right? So this is one of the things that we have to be ready for. We've seen that happening right now, where things shift very, very rapidly, right? So I'm not just talking about the business setting, but also the effects of the pandemic, right? So I think what we have done is that if you ask me, one of the things that we have to be ready for is to be able to change quickly and react to that situation and try, right? And try new things, right? To overcome it.
I like to echo what Tham said just now. So for the very first time, these integrations, it's not owned, by individually, as compared to the previous ecosystem. So human management plays a very important role. And as a CEO, which I would rather want to say is a chief everything officer, that where you're really going to go down to the ground. Now you have been wearing your hats, multiple hats as a CEO in various organizations. How are you going to tackle that challenge when you have, within such short span, you already have 11 brands under your belt right now. I cannot imagine what's going to happen in the next 2 years. you're probably going to have 50 more brands and 50 heads of handling. And you know how individual head has its own sense of being very persistent in the ways in certain things how they want it to be. How are you going to tackle that then?
Okay. Well, we're fortunate in the sense that when we brought in our partners, we've actually known them for a while already, right? So some of the units we've actually dealt with for a couple of years before this, right? So while it may seem that we just came together in a very short time, but the truth behind it is that a lot of the underpinning work, a lot of the relationships were actually built up over years, right? How do we overcome human challenges along the way? And I think that's where building a strong culture of one thing, of being aligned to a North Star, helps direct us along the way. I think that's something that the key founders in the group are aligned on. When we came as a group, we all agreed where we wanted to go. And by doing that, by having that alignment, then we can move forward.
That's a very big shoes you're going to fill in, for sure, in the coming years to come. Now,
sure.
To all live viewers who have just tuned in, a very warm welcome. This is the Beacon of Hope in the F&B and retail ecosystem. Now, what you're watching from the both Tham and Vincent, these questions are totally, what you're watching right now is completely raw, completely authentic. These questions wouldn't pre-arrange. So everything is being answered how they feel and how they find that's completely right for their questions and for their business. We're moving into corporate positioning and also competitive advantage as well. Now currently, who are the emerging competitors in industries which you are currently operate? Are there any such as in Malaysia, Southeast Asia or Asia?
Right. Okay. Maybe let me take that. Right. Okay. Because what we are building is, let's say, ecosystem, and I've been a venture builder for so many years. Hence, I would say that there's no such competitors in town or even in Southeast Asia who are able to provide a total solution like what we are doing right now. Right. But having said that, right. Okay. And let me just give you an example. Like Grab, they are very successful in food delivery, in transportation, and they're going to microfinancing as well. But they are not in partnership or even loyalty management solutions. They are not in retail marketing solutions. They are also not in catering booking or even event space booking as well, right? They're also not in food discovery platform, right? So having said that, there are some segments that they are not in, which are filled up by us. But instead of filled up by small players, in this case, it's filled up by a fairly, I would say, established organization like us, who are able to harness the synergy by leveraging on the services that we are able to provide across all the divisions. Not only that, you might have seen some players that are pretty strong in what they're doing, like point of sale system, but they're only providing on one particular vertical. Focusing on one vertical is, I would say, it's not right, all right, but depending on the market size of the country, right? Like for like Malaysia, right, we are not a huge country. Our population is only about 30 million plus. So how big can it grow if it just focus on one vertical? That's one thing. And as a client, if I want more solutions, they will not be able to provide, right? It goes back to the pain points that they're not able to provide enough value-added services to solve the pain points of the retailers, right? So then you can see those other players who are very focusing on the fintech segment, be it payment solutions or even financing solution as well, right? But they also need to leverage on alternative data in order to provide all these financing solutions to the underserved or unserved market. That is why there's the birth of digital banking, which will not go head to head with the traditional banking industry. But in our case, it's pretty unique because we are driven by the two key pillars. One is the retail technology, and another one is a financial technology, which we're able to excel at the same time. Why is that so? The keyword lies in data. Because the data that we're able to generate from our retail technology, be it from our point of sale system, from our food discovery platform, our kitchenware trading platform, it gives us very valuable data that we are able to funnel for our financial technology divisions so that we are able to lend money to them or even advise them accordingly on the financing roadmap, right? But in order to get all this data, instead of just getting all this raising funds to burn money to acquire users, right? We do it another way. We did it a more sustainable approach by providing solutions which bring us revenue and also income. Hence, we are not relying on external funds, right? To cover our expenses. We are generating profit while we are getting data, which are able to grow our financial technology division at the same time. Yeah. So I would say the current model of retail technology and financial technology, a combination of both, so far in the market, I haven't seen anyone accept us.
Yeah, because I was trying to do research, and I just really couldn't find, also a very distinctive competitor. It was tough, because
right.
the only competitors that I could find, of course, are all some of the Indonesians, gigantic moguls, but it's a lot, on still on the downstream, not as a combination of upstream and downstream, and there's also no tech solutions. And this time around, a lot of integration of these companies are very skilled towards digital solutions. Now, Tham or Vincent, so you have currently 11 companies under the whole big giant roof of Eatcosys. Now, as just now, Tham just briefly mentioned about there's catering, there's events, venues, marketplace, there's food delivery, B2B, B2C, loyalty management solutions, and also the lending facility platform. So pretty much as what I understand it's every cycle of any F&B, you are pretty much fulfilling the whole entire cycle of an F&B, giving them a whole entire holistic solutions. Now, you did mention the key pillars, if I also get it right, of course, is the F&B platforms, the data, and also the financial technology. Now, so among all these 11 companies, you are talking about which generate revenue. Which one is generating revenue? And as the time goes by, which pillar that you see that will be bringing the big bulk of revenue, and why?
Right. Yeah. Vincent, will you take this?
Let me start with that. Yeah. Sure. So all three platforms, you're right, F&B platforms, the data platforms, and the fintech side of the business, all are generating revenue, right? So none of them are loss-making. They're all profit-generating already, right? So that's one of the key considerations when we brought these companies together. The bulk of the business currently is being generated by the F&B platforms. That's where the key revenue is being earned, looking at last year's results. This year, one of the new sectors has come up, which is our fintech side of the business, and that's a fast-growing segment of our business. Right? In fact, it's grown faster than we expected. I think Tham would have more to share about that because fintech is really his specialty, but really encouraged by the development that we're seeing there. But even in the F&B platforms, that area is an area that is growing very well for us this year. Tham?
Right. Okay. Let me add on. Right. So the fintech division, we only commenced the operations early this year. And why we are so confident of doing that? Because of the data that we have been harnessing over the last few years, right? That's right. We always begin with the retail technology. Only then we enter into the financial technology segment, right? And why are we doing that? Because having more than 10,000 retailers on our platforms, right? We know ultimately, no matter how well they're growing, they still need fund to grow, right? In order to grow even further, is either they borrow the money or even they tap on the equity crowdfunding platforms, right? Or get investors, equity investors to invest in their business. And we know how tough it is for them to get all this kind of fundings from those private investors. And most of them, they are not bankable. What do I mean by not bankable, right? Okay. It's either they do not have the full 3 years track record to qualify for a loan from a traditional bank, or maybe they have fulfilled that 3 years track record, but the owner personally may have a secret issue. which tarnish their reputation, right? Or maybe, right, okay, they only have that 12 months track record, but they're doing very well. Every month could be generating about 50,000 kind of profits. Profit, not only revenue, profits, right? But no one wants to lend them the money, right? Reason being, no one understands what are the data that they are generating, right? They're unable to verify. But in our case, because we're very familiar with how retail operates, we dare to take the risk, right? Okay, and by giving a microfinancing or 6 months or 12 months, it helps them to roll. That is the function of working capital financing. It may not help them to expand very fast or even open another outlet, okay, or secure another client that will be able to roll and sustain the growth momentum. But in order for them to grow even faster, that is when they need maybe 500,000, 1 million, 2 million in. They will need to get equity investor in. This is where equity crowdfunding comes in. So one of the divisions that we do, we help them to raise funds through the licensed equity crowdfunding platform by telling them what to do, okay, based on our real life experience. Vincent and I, we have raised close to about 6 times, right, through the licensed equity crowdfunding platforms, and we know the ins and outs, right, what needs to be done, right, how do you present, whether the business model is suitable to do that. If it's not suitable, we even get involved in their business to help them to transform it via our digital transformation division as well. So as you can see, how we help them is we help them to digitalize their business. We help them to transform their business model, right? But at the same time, we also give them some advice how to restructure their company, which is suitable to be listed on those equity crowdfunding platforms, and hence they'll be able to get the funds from the public investors to grow their business. In return, because they have grown to another stage, they need more solutions from us. So as you can see, it does bring positive spillover effect to the group as well. Yeah.
And of course, there's no other better persons than you guys, because since you guys know already the market so well, and you have created already the whole entire cycle where you make revenues from the very beginning stage of the cycle, of the ecosystem. Yeah. So if I'm hearing that right, Tham and Vincent, so your models of the fintech will be purely on the microfinancing, purely on the lending facility. Is there possible to go into e-wallet as well? Because that was a very interesting topic, from the previous discussion, and indeed, actually one of the live viewers did ask, is there any possibilities of Eatcosys having its own e-wallet?
Well, I can take that. We have no intention of going to e-wallet segment right now because we are ambitious, but at the same time, right, we are also pretty prudent, right? Okay, e-wallet is pretty crowded because of the existing incumbents players like GrabPay or even Boost, right? They are huge, and the resources and when I talk about resources, not only the manpower, the time and effort, including the financial resources that they have sunk in, right? Okay, is something that we're unable to match, right? So instead of fighting against them, right, why not we work with them? We talk about collaboration, right? Okay, instead of looking at Boost, GrabPay as competitors, we look at them as a collaboration partners. Why do I say so? Under our group, we have a payment solutions company. And then one of the payment solutions, right, we welcome the customers to use e-wallet to make payments. And GrabPay, Boost, naturally, is one of the channels to use it. So instead of going against them, why not we work together, right, and benefit the SME market together, right? So it always go back to our guiding principles. Why are we here? What are we doing? We are empowering the entrepreneurs in the SME market, which has always been the unserved or underserved market. The keywords is unserved or underserved. As long as they are in that segment, we want to go in to help them, right? And that's where the business opportunities lies.
That is certainly very interesting because if you want to do something right from the scratch, and then customer acquisition costs it's going to be huge, and you're definitely going to burn a lot of money. So I really think that it goes back to again the vision and the mission and the guiding principles that you talk about. Eatcosys is truly really helping the underserved. Very well put. Now, just out of curiosity, is there any specific businesses that you're looking at the moment right now? Any specific brands that you are eyeing on? Maybe it's gonna just give some teasers over here. Not the exact brand, but any specific pillars that you're looking at to expand and extend.
Well, I guess what Vincent and I were looking at could be a bit different because we specialize in different segments.
Yep.
I would look at other divisions under the fintech divisions, right? Okay, how are we able to enhance it further, including I will not discount the possibility of going to the licensed P2P segment or even the licensed equity crowdfunding segment, since these are something that we know our retailers need and it's something that we are very familiar with. Right. Okay. So I do mind going into that. But Vincent himself, he might have something else that he would like to buy. Right. Okay. We are on a shopping spree. Right. Okay. So I'll let Vincent say what he wants to buy then.
You make businesses look so like you guys are like tycoons like that.
Let's go to the wet market and buy some already.
Making businesses it's like so good timing to buy businesses. Yeah, Vincent yourself.
I would look at typically the retail technology side of the business, right? So we would look at companies that fit into what we're doing. Again, coming back to our guiding principle, I think one of the key factors that we would look at is, do the founders that or the company that we want to acquire have this mindset to want to empower and enable, right? So that must be true to their business first, right? If it's not, then it doesn't fit in. The second thing is that does the technology that we acquire fit into the retail space or the F&B space and plugs in to what we already have, right? Can we help them grow? Can we speed up that growth process for them as well? So I think this would be some of the key things that we would look at when we assess whether we want to acquire a company or not.
Now, I think this question is probably more skilled for Vincent. I think this is more of your passion part. And in fact, it's also one of my likings as well. Cloud kitchen and food delivery, of course, was a big win since the pandemic started. And I can foresee that the evolving cloud kitchen is evolving, right, in this particular region. And of course, I think I would like to ask, is this somewhere along your pipeline, some things that you guys are passionate of? And also, you have that food delivery, which is also food advisor. Food advisor is the food delivery. I'm also particularly quite keen in this, that how food deliveries, would want to play a role, of having a slice, of this highly dominated, market shares, by Grab and Foodpanda. Because these two, I done the stats, these two are literally just dominating the market by 70 and 66%, which is a very close margin. And the rest is all single digit. Yeah. So yeah,
correct.
On that two questions.
Yeah. Okay. On the cloud kitchen question, right? We actually have an investment in a cloud kitchen under our venture capital. Right, so that's something that we have already ticked off the box, right? Yeah. So, yeah. Thanks to Tham, right? I think that really you got to credit Tham because he saw the potential of that very, very early on, and so we took a stake of that in that space quite early on. But it's also a different look and different take on how the typical cloud kitchen would operate, because we don't look at it from the point of just renting space, but in this case, the cloud kitchen that we have was already a established brand that was creating multiple delivery brands, right? And we found that was a sustainable model rather than just renting out space and let's see whether you grow or not, right? So again, that comes back to the whole idea of empowering and entrepreneurs, right? Because we think that is not ultimately a real win model for F&B entrepreneurs starting out in this space. Back to your second question on Grab Food and Foodpanda being the dominant players in food delivery. Yes, I think it is a space that we do but it is actually a value add that we provide our existing merchants, right? So many of our merchants are also on Grab and Foodpanda. We provide them an add-on service where, for example, if they want to go beyond Foodpanda or Grab, then we have solutions that will enable them to quickly put on a food delivery platform, right? So it is a value add, right? I've got my dog barking in the background.
I know,
so
with some
sure
interesting friends. So, we'll just stick that, some sound effect then. Probably
Right.
hungry for supper
Yeah.
right now.
Must be because of the food delivery.
Yeah, could be, yes. But I think the challenges that restaurants and cafes are encountering today with a dominant or two dominant food delivery platforms is not something strange. It's actually similar to what the hotels went through with the online travel agents like Agoda or Booking.com 10 years back, right? Where if you did not control the inventory that you sold through through online travel agent portals, you'll find that they would also determine the price that you sell, right? So it's important for F&B entrepreneurs now to understand that Food, Panda, and Grab play a part in their channel strategy, but it should not be the only method or only channel with which they rely on. They need to build their own channel. So we've got some merchants who have done that, right? They use Instagram to full effect to sell them their wares, right? And over time, they have got themselves firmly established where they do not only rely on Grab or Foodpanda.
And
I'm sure Tham has more to add to that.
And I think the key word is, it's really the value adding part. That's why, hence, is why we see as much as Grab has also moved into super app. But however, it was still not able to complement the whole entire ecosystem. So the way how I see it, from really the bird eye view, Eatcosys will able to in fact offer really a full cycle of that whole ecosystem, be it whether F&B retail, rather than just one portion of it. Yeah.
Yeah.
That's right.
I want to highlight one thing. A lot of people may have mistaken us as building a super app. Actually, we are not.
Yep.
That is not our direction. We are not building a super app because most of our customers are B2B. So we deal with the merchants and retailers, right? We're building platforms to empower the retailers, right? Okay, we are not like Grab, who are building all these marketplace who deal with the end consumers directly. Yeah.
Thanks, Tham. Before we move into a more serious note, to all live viewers who just tuned in, we bid you welcome. This is the evening live showcase of the Beacon of Hope in the whole F&B a retail ecosystem. I would say there's just no other better time than now to actually interestingly find an incorporation that integrates all digital solutions which are effective, practical, and also reasonable to help entrepreneurs who are certainly in a dire situation right now and possibly even thinking of giving up this industry. But these two, I would say they're the white knights of the industry and coming, and I believe they're doing great stuff. And what really amazes me is of course the astonishing results that are being achieved. Now, however, just also for everyone's notice, if you could hear some background effect, this live showcase right now is taking place from home, which initially we were supposed to do a live production from the studio. So of course, due to the current MCO, ongoing MCO, every one of us is have to be doing from home, which we are of course complying with the SOPs and adhering to the rules and the regulations. Let's move into a more heavier part of it, the M&A. So the whole business model is a whole chunk of your M&A M&A part and also the selections, of business, humans, the leaders, involvement and decision-making plays a very important role. Now, in all M&As, leaders play 5 essential roles, right? Being a visionary, cheerleader, closer, captains, and also crusaders as well. How do you approach these roles individually?
Well, that's a very good question, right? I would say Vincent and I, we kind of share that role, okay, equally. And because we complement each other very well. He's from the tech background, I'm from the financial and corporate background, right? Okay, so we teach each other a lot of things. And one thing we share in common is both of us, we are serial entrepreneurs. So when it comes to merger acquisitions, one thing we realize the most important thing is when it comes to character assessment, it's always the people purpose, right? Okay, because no matter how fantastic is the idea, this just happened this morning. A good friend of mine asked me, okay, why am I sharing ideas with her, right? Okay, so I told them, you can take my ideas, but whether are you able to execute it, right? That is the problem. And when it comes to execution, it's always the people behind it. Not how great is a tech or the tools that you have. That is an enabler to help them even further, right? But if someone who's running there, right, are unable to execute it, right? Okay, no matter how fantastic ideas, you're unable to do that, right? So when it comes to assessment of character, it goes back to the guiding principle of why are we building this in the first place, right? And since we are the founding partners, right, of this service tech helping the retail segments, right? We already have that cast in stone, the vision and also the mission. So the partners that we talk to are partners that we have been working with for years. And the fact that we are able to work with them for years, it means that we have built certain relationship and chemistry. We are helping the industry together. So that is the part that we take comfort. A lot of people might be doing a lot of due diligence. I'm a specialist when it comes to merger acquisitions, right? Okay. Someone even joked that I'm a paper guy because everything I taught is just paper, right? Okay, based on paper, valuation based on paper, this based on paper. I do a legal due diligence, financial due diligence, all papers, right? Okay. Well, undoubtedly, that is the normal procedures, okay, back then during the corporate world. But as we have spent so many years running businesses ourselves, right, okay, the most important due diligence that a lot of people have forgotten is, of course, the operational duty. And when it comes to operational due diligence, it's a due diligence on the team, not only the partner, but the management team of the company that we are acquiring or merging, right, okay. So we have been working with them for years, so that make them a natural partner to Eatcosys. When we formed this and when we decided to embark on the IPO path, right, okay, and when we start sharing with them more details, they are very keen to come on board so that we have a bigger platform to help the community. Yeah. Maybe Vincent, I'll let you share what's your view.
So I see the both of you are visionary in that 5 rows. I see the both of you can complement each other as a cheerleader. But what happens is, when one becomes a closer and the other one becomes a cheerleader, the other one becomes a crusader. What happens to that?
Oh, well, I think that happens quite often. Okay, sometimes I'm the bad cop, he's the good cop, right? And sometimes he's the bad cop, I'm the good cop, right? I think we need that
How
kind
comes
of
to the equilibrium point? Because it's really, I honestly cannot imagine and wrap around my head because this plays such an important role. And I think that the amount of discussion or probably the arguments, how to come to equilibrium points, to that.
Well, maybe I'll let Vincent share that.
Yeah, that fascinates me, to be honest, yeah.
I think it's also because we have known each other for, well, six years now. Right, so
yeah.
It's taken time for us to understand each other. It was, I think there was an initial chemistry that I felt with Tham, right? That made him such a perfect seed funder. He was our first external seed funder for Vimo when I first started Vimo 7 years ago, right? And there was a reason for that. why I invited him, because I felt that he could complement the areas that I didn't have, right? So I think one of the things that we work well with each other because we know each other's shortcomings, right? There are things that I do well, there are things that he does extremely well, right? And I think the age difference also plays a part. He usually brings this up in a lot of discussions. I'm surprised that he hasn't brought this up today.
You still look very young to me, so Vincent. Yeah, certainly.
Thank you. But I think, yeah, because our temperaments are different, and that helps to balance our relationship as well. It's the same with all the other co-founders that we've brought on board as well. Our temperaments, our skill sets are different, but we are all aligned by one thing, that we want to enable and empower the industry, right? And that's important. So
cool.
If we have one guiding principle, then we're all good with that.
You have an aggressive plan, so going ahead, knowing the both of you as an individual, defines that synergies that what will be created from the ecosystem. Now, how do you guys intend to cross-sell, promote, and also manage clients?
Vincent,
let me start with how we do that, right? So you're right. I think your question would be similar to what many people have in mind, right? I said, hey, how can you digest all these solutions and services or all these companies overnight, right? So to which we always said that it took us years to build this relationship. But nevertheless, the proof is in the pudding, right? Right. So one of the ways that we're doing that is through our point of sale solution, which serves as an entry point for many new cafes or new retail businesses starting up their business. How we sell our point of sale solution is very unlike how a typical point of sale system is sold. It's typically seen as a cost center because it's a necessary cost of doing your business. You buy the POS, all it does is that it manages the record of your business, and that's it, right? For us, what we do is when you sign up and subscribe to our POS at 1,200 ringgit a year, you actually get 600 ringgit credits back. These 600 ringgit credits are then used for you to buy coffee beans or kitchen ingredient supplies, right? Or pastries even from Bundle Up, which is our procurement platform. You could also buy kitchenware from our kitchenware trading platform. And if you need an online payment gateway, we have that as well, right? Again, you use your credits to do that. Or if you want to be listed on Food Advisor, Vimo, or Feed My Guest, then again, you use these credits to do that. So immediately through the point of sale system, we introduce all our other services to them, but everything that they use in these credits actually help them generate more business. So for example, if they buy coffee, they can sell that coffee, right? And make a markup on it and easily cover the cost of their rental of the POS already. Apart from that, we also combine our fintech solutions inside, where by having that data through the POS system, we have that transactional data, we're able to provide them financing at an earlier stage rather than 3 years or 12 months, right? So this is where the power of an ecosystem comes in, right? That we have all the solutions that enable them to grow faster.
So while this is mainly more of impacting on the B2B, the fact that where you have also mentioned the credits, that is mainly targeting on the B2B. Do we foresee any B2C also to enjoy this part? Meaning that now I want to be, let's say, Eatcosys friend, and to tap on Eatcosys just on the consumer part. Is that also one of on the pipelines you're looking at, or purely just very strictly on the B2B part?
No, even on B2C. Good question, by the way. I'm glad you brought it up.
Yeah,
so
because it makes me feel like, I also want to be Eatcosys friends. Yeah. I don't know how I just came out with that, but...
it's a good point, and it's something that we've already started doing. So let's say, for example, if you buy if you make a delivery order through one of the merchants on our platform, right? What we're now offering on a targeted basis is sometimes crossover sales into kitchenware items from MCS. Right? So that wasn't me this time. Yeah. So with the items that we have on My Cooking Story, which has a wealth of many items of kitchenware to choose from, so we are able to pair this, right? So when you buy a cake from somewhere, you might get a discount on a Tupperware. Right? So those kind of cross sales are already happening within the group.
Sweet.
So that's the consumer part of it.
Well, so you're really truly covering up the B2C and B2B. Now, that's what you heard from the both of the Eatcosys chairman as well as the group CEO. Really bringing the whole entire ecosystem to be benefiting the industry, the sector itself. One of the biggest takeaways from this, while we understand that merger and acquisition plays the pivotal roles for them in deciding which business. A lot of businesses has been selected based on relationship, but moving forward, I mean, there's a lot more relationship that you haven't built. Is there anything that you want to add on in the event if this is just starting fresh, but you love the idea, you love the business, but you haven't garnered enough of a relationship? I think I lost you guys again. Yeah, you haven't built enough of. Can you guys hear me?
Yeah.
Yes, we can still hear you.
So, but you haven't built enough of relationships with the respective partner. How do you go about that?
Well, I would say that when you talk about strengthening the relationship among all the partners, right? Okay. The first thing that we have done, I still remember, we did a retreat, right? Okay. And that retreat was a fantastic ice-breaking and we become family overnight. Okay, so that is one thing that I've learned from EO, Entrepreneurs Organization, right? Which we did a lifeline. We share our ups and downs, right? Especially our pain points, right? We have partners who cry on the spot, right? I'm not going to tell you who, right? He's here somewhere. I'm referring to myself.
Of course you are.
You see, the relationship can be built overnight when all of us go naked, right? Okay, we tear down this wall in front of us, right? We become very vulnerable, okay, in front of each other, right? This is the real us, right? But by telling the other person what you have gone through, the happiest moment in your life, the most difficult part in your life as well, right? Okay, suddenly you feel like you're very, very close with them. You felt their pain, right? Okay, likewise, they also felt my pain as well. So that has built trust, okay, immediately and overnight, right? And because of that trust, no matter what we discuss moving forward, even until today, right, things has been very smooth because we do understand where the partners are coming from, all right, okay? Everyone have a different perspective because they are affected by their past experience. So we need to appreciate and respect our partners because of that, right, okay? So respect has been a very key, important culture in our group. Likewise, being grateful as well. So by having this, that has helped us to manage our relationship along the way, right? Even if there are some certain transactions we may not want to do it, right? Okay, and we rather let it go instead of hurting the feelings of the partners, right? So that's how strong we are today.
Here you are, listening to the group chairman and the CEO of Eatcosys on the M&A methodology. So in the event, their partnership is not just built from years, in the event they want to build new partnerships. Very simple. They will just put you on a retreat, get you naked, get you drunk, be vulnerable, and there you go. If the principles, guidelines, shares, almost very similar, that's when boom, you guys, will be the one to partner. And it's as vulnerable as it is, and yet, so authentic. Thank you very much, for that sharing, last but not least, we have now entered into the final stage of this live showcase. That way, of course, as you have heard, their values, their whys, and their what. Right now, let's just crunch some numbers. Let's talk about some values to it, and also the roadmaps to IPOs to build up the confidence of the investors. Now, Tham, this question is directly to you, and it was also a predetermined question from one of our communities. In fact, now he happens to know you. You're no stranger to raising up money successfully via the ECF campaign for a single company previously. Now, in particular, of course, in Unions, Artisan Coffee. Now, this is an ecosystem with multiple companies. Now, is there a reason why you're raising up money via ECF this round and not through private placements, which you could? So is this because you believe you can replicate the similar success as previous time?
Well, actually, we are raising funds through two channels. One is the equity crowdfunding. At the same time, we're also doing a private placement to high net worth and even corporate investors as well. Ever since we have launched our equity crowdfunding, we have been approached by some private equity funds as well. We were humbled by their feedback, and they're very keen to talk to us, which is a very good validation of our business model. So why do we go back to equity crowdfunding? Vincent and I have discussed this a couple of times, but given the fact that we have built VMO in 2017 through our first round of equity crowdfunding, we have gotten Cradle Fund invested in us. Then in 2020, we did another round of equity crowdfunding after we have integrated a few more divisions under the group. And throughout that two round of equity crowdfundings, we are able to attract the right-minded partners, right, who are not only putting in money, but at the same time, they're also introducing investors or even business partners to us to help us to grow the business as well. So I would say that if we know how to utilize this platform, we'll be able to find real partners who are very willing to help us. But the most important thing is we must be very proactive, engaging them. So equity crowdfunding, it also comes with public engagement, investor engagement, or even so-called business partners engagement. Right? Okay, we treat them like a business partners. So we update them whatever things are happening. Right? Okay, wherever they call us or even WhatsApp us, they also ask us what's going on. So we take a very friendly approach. And we also take the opportunity of telling them, look, I need help. Do you have this kind of contacts who are able to link us up, right? So because of that, the relationship has grown from investor issuers relationship becomes business partners, then becomes friends, right? And some we have been keeping that kind of relationship even until today. Those who invested the first round, they may have missed the second round. They put in more money this round, right? And bear in mind, some of them, when they invested in us back in 2017, is at the valuation of 3 million. Currently, we are valued at 70 million, not because we have jumped from 3 to 70, also because due to some acquisitions along the way. But for those who invested at 3 million and today worth 70 million, they have kind of reaped a gain of about 5.5 times. Over the last 4 years, 5.5 times, for them is a very good returns. And looking at us right now at the pre-IPO stage, they already can see the light at the end of the tunnel that in the next 2 years, they'll be holding shares in a listed company, right? And we have done our parts, okay? And if we're going to do that, why not get more retail investor in order to help us to boost our profitability and revenue even further, so that when we go for IPO, we can even maximize that valuation. Yeah. So that is the thought process behind it.
So we are seeing a certain fraction of repeated investors coming in, and at this juncture, what is the just a ballpark? What is the range of a repeated investor from the previous deals?
Oh, I would say close to about half a million.
Okay.
Close to about half a million from existing shareholders, right? You'll be very amazed. In fact, I'm amazed, right? Okay, first round put in about 10,000. Second round they can put in about 300,000, right? Okay, so it shows how confident they are about the business. I think one thing is because they witnessed our growth. No one would have expected an event-based booking platform, which in the eyes of the public back then, right? I know someone even mock the model like this is a stupid model, right? Okay, which to be honest, if it wasn't executed well enough, right? It is going to be a stupid model, right? There's always a fine line between a genius and an idiot, right? Okay, but we give that
So Vincent,
credit
you're a
to
genius
Vincent.
here.
He is a genius. Definitely, he is a genius, right? Okay, right? Okay, I'm glad to be a partner of a genius, right? Okay,
Of
so
course.
because he pulled it off, right? Okay, and together with the ideas that we put in and how do we solve the pain points. The whole idea is how do we move further? Okay, let's push it further. How do we push the boundaries and help the entrepreneurs even more? Right. Okay. Instead of just being event-based booking platform to bring them revenue, events revenue, how are we able to solve their other pain points? Right. Okay. So we are grateful that Creator Fund that see that in us, they believe in the vision that we are building that retail ecosystem. It's also beyond our imagination that we are going into fintech, not only in retail tech. Right. So that is what has given the confidence to our first round of investor. Which results in putting in more money in this round.
Now, this is a pre-IPO via ECF, and when do you intend to go listings, and walk us through in detail three of the major action plans leading towards it.
Right. Okay. Of course, first of all, numbers are important. Right. Okay. So we are working very, very hard to close as many deals as possible, and I'm very, very proud to say that as of today, we have secured close to about 43 million worth of contracts from various parties. Right. Okay. So
Sorry,
that
could
has
you repeat
given
that
us
again? Could you repeat that figure again? So you have currently secured
43 million.
43
million.
43 million
worth of contracts.
Okay. All right.
Right. Okay.
In the totals of the ecosystems.
Yes,
Okay.
yes, across all divisions, right? Okay, and that's not the end of it. This is just some contracts from large corporations. We haven't included some projects here and there, recurring income from different divisions as well. But that itself has built a very strong foundation for the group. And some contracts will even give us earnings visibility for 2022 as well. Right. Okay. So by having that, it allowed us more flexibility and to go out there to be more innovative when we propose ideas. We are more daring when we propose ideas instead of tipping on the road. We're being very careful of try to win a deal, not to be bold. We try to be very different. Okay, we try to give very innovative ideas to our retailers. Right. Okay, and I believe because of that, we start getting more and more contracts and also customers in.
So are you guys comfortable to share at this juncture how much have you guys secured in your investor deals? So you guys are raising up 5M, and this is going to be possibly the biggest ECF ever in the history of Malaysia. And with the rate that you're going, probably could be the biggest in the history of Malaysia. So could you guys share, is it comfortable at this juncture, how much have you guys raised? Just for the references of the live viewers.
Sure. We have raised more than 4.6 million as of today. Right. Okay. So
and this
we
is
are
just
very
time
close
span.
to.
You guys just only went
4 weeks.
Active within 4 weeks. Brilliant. Yeah.
Within 4 weeks. Yeah. So hopefully, of course, we are not chasing for the title of the largest equity crowdfunding. Right. Okay. We are doing our
money
best.
Money is more important.
Right? Yeah. But of course, we are currently talking to some corporate investor who may come in at a later stage. Right. Okay. So that's why if we have raised enough from the public this round, we may close our campaign much earlier.
And it's just not capped as 5M, so you can even possibly go beyond 5M itself, right? If there's more than 5M, you will. Okay. Of course, right? More money, so you guys will be keeping it right.
Of course.
Yeah. So yes, so you're offering right now is 13 cents. And what is the
Correct.
expected IPO price? And also that will give also an estimation if all to fellow investors right now, to the live viewers who are watching, or also you're watching at the replays as well. Their IPO price, the pre-IPO price right now is 13 cents, because this is Eatcosys pre-IPO rounds via ECF. So that will give you insight of what is ROI from the pre-IPO price, right?
Right. Okay. Of course, we are not committing, but we are hopeful that when we go for IPO, based on the results that we are able to achieve with the multiples that we think we deserve, I'm looking at a 20 to 25 cents when we go for IPO. And hopefully, post IPO, we can increase our market capitalizations to 50 cents. And hopefully, by 2024, we can hit a 1 billion market capitalization. So that is our goal.
And with a billion market capitalization, what sort of price are we looking at, share prices by then?
Well, potentially, we'll be
2024.
trading at close to about 1 ringgit and 50 cents. Yeah.
Okay.
Yeah.
So we in a time frame of in the next 3 years, we are looking at a 10x, a potential 10x, possible 10x.
Well, potentially, yeah. We are confident of doing that. If you look at our track record in 2017 until now, right, we have delivered 5.5 times for our investors who invested in 2017. So now even with more resources, with more shareholders on board, and with great partners, I think we are able to achieve that.
So guys, what you're waiting for, a 10x win the next 3 years, there's no other better time. These two guys have seized opportunity during crisis. There goes the wise man always says every crisis breeds opportunity. And there's no other better time with a possible 10x rather than putting into whichever current investment portfolio. There's possibly no other better investment portfolios can deliver that, even through businesses right now. I've always liked integration and ecosystem, and I think that makes perfect sense because businesses can't run individually. And if there's one biggest takeaway from this pandemic, you can't run business by yourself anymore. It has to be it's a whole village coming together. And when it comes to business, it's just integration, collaborations, and the support systems, it's there. And I think you guys have just brilliantly really connected the dots in a way. So before I want to go into my $1 million question, I just want to crunch some numbers. So the numbers look very, very impressive. In fact, last year it's at 30.07. And this year's Tham, the number, it's the projected financials or revenue is 52.
We're targeting a revenue of 50 million.
Yeah, 50 million, 50, 2 million, which we are also seeing also a 5.5x projected this year itself, right? From last year itself, yeah. So walk us through where these numbers are coming from. In the 3 pillars of your F&B platforms, your data, and also the lending facility.
Well, a bulk of it still come from our platforms. The platform as a service division still contribute about 70% of the total group revenue. But moving forward, the shining star will be our fintech divisions, right? But the fintech division are able to grow so fast is also because attributable to the data that we're able to gather from our platforms and also our solution divisions as well. So I would say moving forward in the next 2 years, 3 years, the group major contributor to the profit, not necessarily the revenue, right, will be our financial technology division.
So currently, at 52 million of projected revenue this year, 70% it's derived from the F&B platform. And how much? What's the weightage for data?
I would say another 20% will come from. Another 25% will come from the solutions divisions.
The solutions, right, the data part of it,
such as data part of it, and the final 5% will come from the financial technology division.
And as the year goes by, we'll see the fintechs will be slowly taking over even the F&B platform.
Yes, indeed.
Okay, yeah. Which makes perfect sense itself. Right. So for those, of course, who are keen, to even go through the numbers and also to take a look at the financial statements, of course, there's no hesitance to be also speaking directly to the chairman and also the group CEOs as well. Now, last but not least, I have this $1 million question to you. 3 reasons why I should be investing in Eatcosys. Vincent.
3 reasons. Number 1, I think it comes back down to why we're doing our business, right? Number 1, we're here to serve the business community, right? And I think that is a key enabler for how businesses can grow, right? Second reason is because I think what we've done is that we've brought together all the experience and know-how, especially the experience of knowing what to avoid, right, to Eatcosys, right? And that puts us in a much stronger footing. Third, you're right in saying that it takes a village to raise a business, right? And I think that's especially true when you look at the current pandemic situation where people are banding together to, for example, set up food banks, right? Same thing here. What we're doing is we're banding together to provide a platform, a support system for businesses to grow and build their business on, right? And I think when you have such a platform to enable businesses, then the chance of success is very high, right? And it's not a fourth point, but let me add by saying that some of the investors who have come in this time are actually F&B entrepreneurs themselves. They are not big F&B entrepreneurs. They're actually SMEs, right? They operate 1 outlet, 2 outlets, and they have seen us grow over the years, right? I've actually known some of them over time, right? And one of the things that they fed back to me was like, yes, it's impressive to see that you've grown this idea from what it was back in 2017 to what it is now, right? And they said, yeah, I'd like to be an investor now. Some of our investors are also customers who have used our service before. And again, their feedback is that they like what Eatcosys has become, because now they're not only our customers who have used our platform as a consumer, but now they can also use it as a B2B business.
Tom, yourself?
Back to you.
Well, I guess Vincent has given all the noble reasons, right? Okay. So I'll go with the more commercial reason, which is 1, money. Second, money. Third, don't forget number 1 and number 2.
So typical Warren Buffett style, I mean, you hit the bullseye, I mean, yeah, money. I mean, everybody, let's get real, I mean, at the end of the day, you are hearing this, and for the fact that if you're able to tune in and sticking your butt wherever you're seated, at the end of the day, you want to know what's how you're able to participate as part of this pre-IPO, and what was mentioned by our group chairman Tham himself, it's a 10x and that it's the magnitude that you're able to build, and for the fact that we in just 4 weeks since they have gone live, they have raised up 4.6 million. I got to say that apart from just potentially being the biggest, but I believe it's the support and the know-how, and also being experiences of players in the market. They have somehow just able to connect the dots seamlessly. And with that being said, as you heard the noble answers from our CEO and also the group chairman, which is of course is not only papers, but he's the numbers guy. it's all about let's get real, let's just take the opportunity and let's dive in. For them, it's either go big or go home, and I believe they will definitely be playing, of course, going big in the whole Malaysia ecosystem and beyond this Malaysia. And there you are, ladies and gents, right now, once again, you are tuning in to Eatcosys, the beacon of hope in the F&B a retail ecosystem. For those investors who would like to express your interest, right now you are able to see the links that's showing up on your screen. Do click on that link that appears in the chat box, and you will able to access you directly to the page for you to be expressing your interest to participate in this pre-IPO with Eatcosys. As well as we will be also showcasing the investment offerings for the next 2.5 minutes towards the finale of this show. So hence you're able to look through the numbers, the offering, as well as if you would like to have a one-to-one arrangements with either chairman or CEO, then the Invest AQ team were able to arrange for you by just clicking on this link that you are seeing right now on your screen. So with that, once again, I thank these two gentlemen for taking their time and also spending their insights genuinely, authentically. It's so raw that they did not even see these questions from the very beginning. I hope it does give them some thrilling, but these guys are pretty good. These guys are good lah. So I'm not sure what excites them anymore, what is tough for them anymore. But nonetheless, I think you have seen in-house they have expressed genuinely, and more importantly, I think the working dynamics that they have shown. Of course, these guys are no strangers in the F&B sector. So hence, if you want to get connected with them, I believe they will be more than happy to be chatting with you and to give you as much info as possible. So with that, once again, thank you so much, Vincent. Thank you so much, Tham. Is there any last few words to share?
No, I leave the last word to Tham.
Yeah. Hope to see everyone to be part of Eatcosys, right? Okay, be part of the family and grow together.
There you go. Be part of the ecosystem. So with that, good night, and my name is Arthur Tan, and the signing off. And please take a look at the investment offerings after this, which will be shown on the screen. Thank you. Good night. See you. Stay safe.
Thank you so much. Good night.
Stay sane.